One company supplying power to crores of homes across 8 states and long-term contracts, zero dependence on spot markets for 95% of its revenue, and a construction pipeline that will make it twice as big by 2032, but growth backed by rising debt. Adani Power, here's what I am watching. Adani Power is India's largest private power company, 18,150 megawatt running today across 13 plants in 8 states. The business is simple: generate power, sell it under long-term contracts, and collect cash. And right now, all three are firing. The quarter 4 financial year 2026 results, the headline number is the PAT, which is up by 64% year on year. The revenue is up by 10% quarter on quarter. EBITDA is up by 27%. The full year profit crossed the 12,971 mark. Now we can see all the metrics are up and the EBITDA margin is at 38%, best in the sector. The business is not just growing, it is compounding. The bigger story is, however, what comes next. Adani Power has locked in 23,720 megawatt of new capacity, nearly 2.3 times of what it operates today, and is targeting 41,870 megawatt capacity by 2032. The land is secured, the equipment is ordered. This is not a presentation site, it's a construction site, and the demand is also guaranteed. 95% of current capacity is tied up under long-term power purchase agreements. During quarter 4 alone, they won a fresh 25-year PPA from Maharashtra for 1,600 megawatt. India needs 97 gigawatt of new thermal capacity by 2035. Adani Power already has contract for 13.9 gigawatt of that. Roughly 30% of national requirement is going to one company, and there is one more catalyst, that is inorganic growth. Adani Power has been nominated to acquire stressed power assets from Jayaprakash Associates under insolvency proceedings. Organic massive expansion and pipeline plus the inorganic growth, that is a real growth story. However, there is certain risk involved. The debt has gone up. The net debt is now 45,000 crore as the company's fund expansion, and 21% of volume are still in the open merchant market where rates fluctuate. This is the fundamental analysis of the company. Now, when you look at the technical analysis, you look at the monthly chart of the stock. The this is a more of a bullish chart over a period of time. Before 2020, it was below the levels of 10, trading at around rupees 4, and in May 2026, it has reached its all-time high of 242. There is a nearly 2,300% jump in 6 years. The May 2026 monthly candle is a massive green bar with 690 million shares of volume. This is not retail, this is institutions building position at lifetime highs. Now, when you look at the weekly chart, it spent most of 2023 basing in the levels of 50 to 80. Then it broke above the levels of 100 in 2024. It touched the mark of 180 by June 2024, and then there was a brutal correction all the way to the level of 80 in the late 2024. The weak hands completely flushed. From that base, the recovery has been steady and structured, and in April 2026, the breakout is pushing to all-time high territory with the volume continuation as well. Now, when you look at the daily chart, it is the momentum is intact from 133 in March 2026 to 242 in the May 2026 in the same year. There's a clean impulsive move, and the daily RSI of the stock is 69.62. There's strong momentum. It is not yet in the exhaustion territory. So now we have to look how the stock will move from here. The support sits at around 210 to 230. The first 2 weeks of May 2026 saw the stock consolidating in this level. The stock touches this level, we will have to see if the structure holds or not, and the resistance is difficult to identify because the stock is at all-time high. However, it will be in the levels of 242 to 245 and above that. So based on this, I will be setting up my GTT. I will be entering the stock at the levels of 218, the midpoint of the May support zone. The stock is at 242, so I am waiting for a pullback. 218 will be my entry price, and I will be setting up my stop loss and target price using OCO. So my stop loss would be 198, below the entire consolidation band. Support falls below here. Exit is clean and there is no emotions involved. So 198 would be my stop loss. My target price would be 268. Price discovery above the all-time high, and also the risk reward ratio will be about 1:2.5, ideal for the swing trade setup. So my target price is 268 based on the risk reward ratio logic, since the stock is currently trading at an all-time high. So I have set up my plan which will execute itself, and there will be no active emotions involved, no watching the screen whole day. So my question for all of you is, with good Q4 results but however more or less the same 2026 final results, is there more scope or is there more momentum for this stock? Please give your viewpoints in the comment section. I advise you to do your own research and trade safely. Thank you.